Hi there, it's Kurt with Catalyst Firm. Let's talk about LLCs and specifically for real estate agents. So if you're a real estate agent and you are thinking about setting up an LLC for yourself, I think it's important to understand contextually where you are in time and space in your career. If you're just getting started and you live in one of these states that doesn't charge a lot to create an LLC and doesn't have a high filing fee like California does, then perhaps you want to set up that LLC right away. The LLC doesn't change what you can deduct as a business owner. And I think that's really important to distinguish. If you're just a sole proprietor, and I don't mean just like you're only a sole proprietor, but I mean just in the context of this, you are setting yourself up as a sole proprietor. You're just that. You're not an entity as well. Then you are able to write off any of the business expenses that you have that are reasonable and necessary for your profession. So if you're a real estate agent and you're just getting started, you'd write off things like your supplies. You'd write off your mileage. You could write off some of the fees that you have related to advertising, or if your brokerage is charging you rent or some sort of desk fee. All sorts of things like that that you have as deductions available for yourself for the first time. And that is a great thing. And it doesn't change when you become an LLC. In fact, the LLC, all it does is it creates this legal structure for your business that is separate from you. You would create a separate business bank account. But the thing that we love about it as CPAs is that I can do an S Corp or a C Corp election for an LLC, and I can't for an individual. So if you're set up as a sole proprietor, you have to go through the step of setting up an entity first, because then we could choose the entity type that we want to correlate it with. And if you're just getting started, maybe it's good for you to set up an LLC just because maybe you need that structure. It'll create a separate business. It'll force you really to go to your bank and they will make you set up a separate business bank account. It starts you on this process of thinking of the business as separate from yourself. And that's a good thing, because the reality is, it's different from who you are, and it needs to be treated with the same level of interest and respect that you would for any other thing. See, a company is really built around this idea that it's this concept that is separate from you. And if you go the route of a corp, this idea of like a corpus, this original language, I don't know if it's Latin or something like that, but whatever the original language was this idea of a body. It's a separate living structure and you want it to be healthy. Well, setting up a business bank account, getting clear over how much income and expenses you have, you could do that either way as a sole proprietor, but you just create a little bit more mental clarity between yourself and the business, I think, by setting up that LLC. Now, again, if you're living in a state like California where they have a high fee that they're charging you at the entity level, at the state level, then be careful about that and talk to an advisor about it. But if it's just you and you're starting out as a real estate professional for the first time, what have you got to lose? You don't want to switch to being an S Corp until your business is really consistently providing for you. It needs to be about $100,000 to $150,000 of recurring income for you. If it's not, then the S Corp can wait. And you can still write off all the things that you would normally write off. But one distinction though too, that I think is really important to note, is that if you're an LLC, you pay yourself distributions, just like you would have if you're a sole proprietor. You just take that money and send it to yourself, to your personal bank account, gets a transfer from your business account. Real simple. And that doesn't create extra tax. The fact that you made money is what caused the tax. And we'll have a separate video that will go through some of the ideas of how do business taxes work. And I think that'll be important for you to understand. But the LLC is the starting point. It will allow you to just write off the same things and be able to eventually get yourself into an S Corp situation. It's when you are tax designated as an S Corp or C Corp that you'll put yourself on payroll. You cannot do it until then. So just keep that in mind. You can keep your business very simple, even as an LLC.